And John, speaking of, this is something we deal with a lot. Obviously, we're in a destination market where you have a lot of people looking to buy second homes, vacation homes, rental properties. What's the financing? And again, I know every case is going to be different, but what's it look like from a down payment scenario for most people looking to buy a second home, a vacation home, or a multifamily type property that you guys loan on? And I know there's, it's going to vary from person to person.
Sure, no, just in general, as far as guidelines are concerned, with a second home purchase, it's 10% down, so 10% of the sales price.
That's surprising. I thought it was higher than that, 10%. So you can buy, and the second home definition is, isn't there like some sort of radius or distance it has to be from the primary property, or I could be wrong, but it used to be that way.
Typically, a second home, it's going to be located in a market other than where your primary residence is located. So a second home, by definition, is a place where you're going to go on vacation, or you're going to spend at least 6 months of the year out.
So, like if somebody lived in Brandon and wanted to have a second home at the beach, that should work.
Absolutely, yeah. And it's the fluidity of the mortgage insurance, which has really eased up a lot from where it was a couple years ago, that's caused these down payments to really come back to kind of where it was before the market imploded.
And so straight rental property, not second home, a straight rental property that you're disclosing you're going to rent out, the down payment there.
15%. I'm sorry. Yeah, 85% loan to value. So you got to put 15% down because we can get mortgage insurance on that as well.
Yeah. So that's interesting because I think a lot of people have a perception that it's going to be more of a down payment, and again, the mortgage insurance was probably. Yeah, so that's loosened up. So people, so again, and that's a great opportunity for a lot of people that are out there, because there are a lot of people that would love a little small condo or property over close to the beach that they could rent out or seasonally, and we're seeing a lot of that. That's definitely something that's out there. And a lot of that audience has cash, but for the amount of down payment and where the interest rates are, and how much different are interest rates for either the second home or the rental property versus what you're quoted for your primary residence?
I can answer that question and take 3 hours to tell you. The short version is this: ultimately it's going to depend on the borrower's profile, so their credit score, what their reserves are. The down payment component on an investment property, just based on agency guidelines. Agency is Fannie Mae and Freddie Mac. It depends. There's a sweet spot. So ideally, at 25% down, you're going to get a rate very close to the rate that you would get on your primary residence.
Right.
There's about half a point swing in rate if you're putting the minimum down required to get into an investment property. Second home rates and primary purchases, so your primary residence and your second home, expect to get the same interest rate.
So we're going to continue this conversation as well as wrap up the show after a quick break here on 970 WFLA.